Critical Mountain Pictures presents the Forex video training series. Purple Belt course, treating with divergences. The chart is a daily chart of the dollar Swissy. You can see from the falling trend line that the pair has been in a downtrend. However, there are signs that the downtrend is coming to an end. While price has registered lower lows, the stochastic, our indicator of choice, is showing a higher low. Something has piqued our interest. Is the reversal coming to an end? Is it time to buy the pair? If you had answered yes, then you would have been knee-deep in your winnings. It turns out the divergence between stochastic and price action was a good signal to buy. Price broke through the falling trend line and formed a new uptrend. If you had bought near the bottom, you would have made more than 1,000 pips, as the pair continued to shoot even higher in the following months. Let's take a look at hidden divergence. There's a daily chart of the dollar Swissy. Here we see the pair has been in a downtrend. Notice how price has formed a lower high, but the stochastic is printing higher highs. According to our notes, this is hidden bearish divergence. As you can see, this drop continued, and eventually the price fell nearly 2,000 pips. While using divergences is a great tool, there are times when you might enter too early because you didn't wait for more confirmation. We'll talk about a couple of tricks so you have more confirmation that the divergence will work out in your favor. This isn't so much as a trick as a rule. Just wait for a crossover of the momentum indicator. This would indicate a potential shift in momentum from buying to selling, or vice versa. The main reasoning behind this is that you are waiting for a top or a bottom, and these can't be formed unless a crossover is made. In the chart, the pairs showed lower highs while the stochastic already made higher highs. Now that's a bearish divergence, and sure is tempting to short right away. But, you know what they say, patience is a virtue. It'd be better to wait for the stochastic to make a downward crossover as confirmation that the pair is indeed heading down. A couple of candles later, the stochastic did make that crossover. Playing that bearish divergence would have been very profitable. The main point here is just be patient. Don't try to jump the gun because you don't quite know when momentum will shift. If you aren't patient, you might get burned on one side keeps dominating. Moving out of overbought, oversold. Another trick would be to wait for the momentum highs and lows to hit overbought and oversold conditions, and wait for the indicator to move out of these conditions. The reason for doing this is similar to that of waiting for a crossover. You really don't have any idea when the momentum will begin to shift. Let's say you're looking at the chart and you notice that the stochastic has formed a new low while price hasn't. You may think it's time to buy because the indicator is showing oversold conditions and divergence has formed. However, selling pressure may remain strong and price continues to fall and make a new low. You would have been bummed out if the price didn't continue. In fact, a new downtrend is probably in place as the pair is now forming lower highs. And if you were stubborn, you might have missed out on this down move too. If you had waited patiently for more confirmation that the divergences had formed, you could avoid losing and realize the new trend was developing. Draw trend lines on the momentum indicators themselves. This might sound a little ridiculous since you normally draw trend lines only on price action. This is a nifty trick and can be particularly useful, especially when looking for reversals or breaks from the trend. When you see that price action is respecting a trend line, try drawing a similar trend line on your indicator. You may notice that the indicator will also respect the trend line. If you see both price action and momentum indicator break their respective trend lines, it could signal a shift in power from buyers to sellers, or vice versa, and that the trend could be changing. Now you can go scan the charts and see if you can spot some divergences that happened in the past. It's a great way of getting your divergence skills up to par.